And the fallout from the crisis in Ukraine continues. The European Union is now blocking real estate and service-based investments in Crimea. EU officials say this latest round of sanctions is aimed at keeping tourists away from the Ukrainian resort area, which is now supported by Russia. And Russia's currency, the ruble, has lost over 46% of its value so far against the dollar, and consumers there are now frantically stocking up on big-ticket items and smaller luxuries. They're trying to beat an imminent wave of price hikes on imported goods, ranging from cars to cosmetics. Chinese automaker Geely, American fast food giant McDonald's, and beverage maker Pepsi, just few of the companies that have already raised their prices. Swedish furniture company IKEA warned its customers earlier this week that its products would be more expensive starting on Thursday. And Apple has stopped all online sales of its devices in Russia. And Germany's largest retailer has put plans for a Russian chain store on hold. Well, for more on Russia's economy, the impact of sanctions and oil prices, we're joined from Los Angeles by Jeffrey Borneman, founder and CIO of Rampart Portfolio Partners. Jeffrey, good to have you on the show.
Hello, Michelle. Thank you for having me on.
So, Jeff, those Western sanctions, plunging oil prices, they've really hit Russia. As we mentioned, the ruble tanking about 45% against the dollar so far this year. Russia's warned that its economy may slide into a recession. But during his address, Putin refused to call it a crisis. He was confident. He was defiant. He said he will revive the economy within 2 years. But he did say that Russia will have to amend its plans. So, Jeffrey, what does that mean? What are Russia's alternatives here?
Well, it's interesting listening to his speech that he centered on the fact that he wasn't going anywhere, and I think that has been the goal all along, or at least all this year, was to replace Putin. Who would we get in his place? We don't know, but we know that we don't want that strong of a leader. His alternative plans, they could be many. He could institute price controls. He could do all the things that the old Soviet Union did. But, you know, the key here is not necessarily the sanctions, although they have hurt, but it is the fact that oil has fallen, WTI and Brent has fallen to the point where his cash machine is empty. He's got to get supply off the market to drive prices higher. And that I think, is his goal, and that is what I think everybody fears, how he might do that.
Well, Jeffrey, he did mention diversification, and Russia's economy is set to contract by about 4.7% next year if oil prices stay where they are. How can Russia diversify?
You know, that's been the age-old question. Russia's been saying that for 20 years, since the first time he was president. There really isn't a way that Russia makes two things, or produces two things. They're a great gas station, and they're a great arms manufacturer. They're trying to make headway in electronics, but other than that, you really can't name a Russian product outside of caviar and vodka. So I don't know how they're going to diversify an aging population that really has a birth control problem.
Well, at the same time, President Obama may put a further squeeze on Russia. He did sign a bill that will allow the White House to impose further sanctions, though he did say that there may be no immediate plans to impose them. What is the administration's hope here? Are they thinking that Putin's going to say, all right, I've had enough, I'm going to pull out of Crimea? What is the ultimate goal?
Well, the ultimate goal for this administration is to remove Putin from power. And how they do it is, right now, this is an economic war, and we have declared war on Russia. And I'm not a Russian apologist, but this is a currency war against the ruble, and we are winning. Russia's got $400 billion in reserves. They've got $100 billion in debt. So they are, in essence, in much better shape than not only all of the EU, but also the United States. They're also sitting on 38 million metric ounces of gold, and that may be the plan. The plan may be to crash the ruble to the point where Putin has to use his gold reserves and get the gold away from Russia.
Well, Jeff, you mentioned the EU, and perhaps the master plan is to get Russia to divest from its gold investment. In the meantime, more sanctions on Crimea from the EU on Thursday. But Italian Prime Minister Matteo Renzi, he's urging a rethink of the West's attitude to Russia, saying you don't want to put Putin in the corner and that an embattled Russia will benefit no one. And he's opposing the idea of more sanctions. Are we starting to see a splintering in EU solidarity against Russia? Does the EU, in fact, have the stomach for more sanctions?
You know, the irony is that the EU is suffering along with Russia. Your question is a very good one. How much more pain can they sustain? It would behoove the EU to, frankly, say no. We're not going to do this. We're not going to allow Putin to really be put into such a tight corner that he has to lash out militarily. And frankly, that may be what the United States is wanting him to do.
Well, whether the U.S. wants military action from Russia, we're going to have to, unfortunately, leave it on that very interesting point. We'll chat about it at a later stage. Thank you so much.